Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Let's get to something that we really got into or started to get into yesterday as President Trump appeared to invent a new weapon of economic statecraft by threatening what he dubbed secondary tariffs on countries that buy oil from Venezuela to choke off its oil trade with other nations. With more on the what, where, when, and why, with us is Bloomberg News U.S. Treasury reporter Dan Flatley. He's out there in our Washington, D.C. bureau. All right, Dan, what exactly do we know about possible secondary tariffs, and why are they kind of secondary tariffs?
Yeah, no, it's interesting. So it appears that Trump has sort of taken this idea of secondary sanctions, which has been around for a while, and his sort of fondness for tariffs, and kind of combined the two. And it's understandable if you look at it from Trump's perspective. He's talked for the last several months about how sanctions could hurt the U.S. dollar, and how he wants to protect the U.S. dollar, and he's certainly made no secret about his fondness for tariffs. And so what he's kind of come up with here, and we're still trying to understand some of the details here, is essentially an idea to use tariffs as a sanction. And one of the features that tariffs as a sanction has that sanctions don't have is the ability to sort of ramp them up and ramp them down depending on how the target nation is responding. So if Trump doesn't get what he wants out of Venezuela, he could take them up to 30% or 40%. If things look like they're improving and he's getting what he wants, he could reduce them. So it's sort of a combination of what he has talked about as his favorite word in the dictionary, this very powerful tool, the tariff, with sanctions, a more traditional kind of use of sanctions. So, it's certainly interesting. And I think just to, kind of bring it all together, that a lot of this is aimed at China, because China is one of the big buyers of Venezuelan oil. So, it kind of fits into that whole trade discussion as well.
Well, that's where I wanted to get, because we said that it's on countries that buy oil from Venezuela to choke off its oil trade with other nations. It's really just about China, right?
Yeah, I mean, I think that a lot of folks that have reached out to me in the since the story went out, we're kind of making that point that this is really about China, and the Chinese some Chinese officials did respond to the story and opposed the use of what they call or characterize as extraterritorial use of U.S. economic statecraft tools like sanctions and tariffs and things like that. And so basically what we know at this point is Trump has imposed successive rounds of 10%, two successive rounds of tariffs of 10%. Each on China. So we're at 20% right now.
Okay.
And if these tariffs were to go into effect, these secondary tariffs, then we'd be looking at potentially an additional 25% on top of that. So, we're talking about 45% tariffs on Chinese goods and services potentially. But, we still are kind of sorting through some of those details here. And of course, all of this stuff is very much subject to change depending on how the government in Venezuela responds, what Trump thinks he's getting out of them, and all of that. So, it's like many of the things that have been rolled out in the last couple of months, it's all kind of subject to change.
How is this enforceable, Dan?
Well, it's a good question. Sanctions are primarily enforced really by the banks and the big financial institutions who safeguard the channels that are used to transmit money and other forms of transactions under a fear of penalties, big fines and stuff like that imposed by the U.S. government. Secondary tariffs would, in theory, be potentially imposed or enforced by a similar mechanism, but it would have to be kind of set up in a new form, because this has never really been tried before. So I think that all of these details are sort of things that will have to be ironed out. But again, this is assuming that they ultimately go into effect as announced.
I think about kind of longer term in terms of the implications. Can we expect some kind of retaliation? I'm curious how we are kind of gaming out what we might get then from China.
Yeah, it's interesting. I spoke last night with somebody who worked in the first Trump administration. who raised this point, which is if secondary tariffs are used more frequently, it does kind of give other countries the option of using tariffs in retaliation for the secondary tariffs, which they don't necessarily have in the same way with sanctions. So there's a retaliatory element to this that becomes more operative, or whatever you want to call it, with tariffs than might be the case with sanctions. So that is kind of an interesting wrinkle in all of this, and so we'll have to kind of see how this plays out.
I mean, Dan, tariffs make so much sense for the United States, be it President Trump or somebody else, because we buy so much. Is that also fair in terms of how we think about this? And this is why maybe it's making it all so uncomfortable globally. We buy so much stuff.
Yeah, it's a great point. I mean, Stephen Myran, the president's chief of the Council of Economic Advisors, made this point yesterday when he was here speaking with my colleague Saleha Mohsen about the fact that the U.S. does buy so much from other countries, and so we do have a point of leverage there. I think what Trump has kind of identified as well is that, you know, even if these tariffs don't work, if they don't have the intended effect like a sanction might, you still get some revenue in theory from the tariffs themselves. So it's kind of a win-win situation in his mind. So I definitely think that gives the U.S. some leverage, but it does potentially have some unintended consequences, as we were talking about with the retaliatory tariffs. One
last question, Dan. So again, another reason for us all to focus on April 2nd next week?
Yes, absolutely. I mean, April 2nd is, as Trump has described it, Liberation Day. So we're expecting some more tariffs, some reciprocal tariffs on April 2nd. There's been a lot of activity behind the scenes, and my colleagues have done some great reporting on this about how within the administration there's sort of the hawks, the trade hawks, and some people who are more of a moderating influence that are all kind of trying to make sure that this works in the way that it's intended. And just by sort of doing that, and by sort of following the letter of the law, by making sure that you're on solid legal footing, it does appear to have somewhat of a potentially moderating effect on the tariffs themselves, because you want to make sure that when you put tariffs in place, that they stick, that they work, and that they're not subject to legal challenges and other things like that. So that does kind of appear to be limiting the scope of maybe some of the maximalist tariffs that we were expecting a month or two ago. But, you know, caveat emptor, Trump could, you know, with the authorities that he has, impose still very stiff tariffs, you know, basically, you know, on his own discretion, at his own discretion, and that is something that I think still has markets a little bit nervous.
All right, good stuff, and so glad we could check in with you, Dan. Thank you so much, Dan Flatley. He's U.S. Treasury reporter here at Bloomberg News. He is joining us from our D.C. bureau.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
For more than 2 decades, Google search has definitely ruled the web. Search is also Google's beating heart, generating more than $198 billion in revenue in 2024, almost 60% of Alphabet's annual sales. Tim, though, enter into the AI race, ChatGPT and more, and Google is searching for its next game.
It is the cover story of the new upcoming issue of Bloomberg Businessweek, which you can read now at Bloomberg.com and on the Bloomberg terminal, and soon on newsstands. To get directly to this story, just go to Bloomberg.com/Businessweek. It's also the big take, which means our editorial team has singled it out as a must-read for all, and I absolutely agree with that. The reporters on the story, Bloomberg News technology reporter Julia Love and Bloomberg News big tech reporter Davey Alba. Julia is in our San Francisco bureau. Davey here with us in our New York studio. Julia, I do want to start with you because Google is synonymous with search. We Google things. It's a verb now. It's ubiquitous. It's dominant for what seems like forever. That was then, but there are some new players in town. Enter the AI era. What's going on?
Yeah, so the search market has really gotten a lot more interesting over the past few years. There's been a rush of new players. A lot of people use ChatGPT for search. There are also startups like Perplexity, and those new companies have really challenged Google to use generative AI to rethink what the core product should look like for the first time in many years.
So what's kind of wild, Julia, is that It sounds like Google and Alphabet had an opportunity to maybe beat ChatGPT at its own game, and yet it kind of passed. Take us back there.
Yeah, so with this story, we are really shining a light on the attempts that Google employees made to incorporate generative AI in search, to have a chatbot that would provide answers alongside links. They were trying to do this well before the launch of ChatGPT. Google invented the AI technology that makes this possible, but the search team that proposed this encountered a lot of resistance internally. The company was really loath to reconsider its business model. They also had some concerns about the accuracy, just because Google is held to such a high bar. It's a critical utility, not just a fun novelty like a startup might be.
Well, Davey, the story also explores, over the last couple of years, the complaints that people have had when it comes to Google search, and the idea that it hasn't become as useful for some people because of the way that publishers and website developers have really started to game the system.
Mm-hmm. Yeah. I think that's something that we explore in the story. Even before generative AI sort of exploded onto the scene, there was already a sense that you could make Google more useful than it just on its own by doing things like typing your search query and then adding Reddit. And then, Google was also contending with site owners and sort of spammers who just knew Google's rules and wanted to game the system to get right up top on search results. But those results weren't necessarily the best quality results. So that was sort of the scene in which, ChatGPT came on, and then Google also had to figure out how does it respond to this existential threat, and also improve itself so that some of these quality issues are addressed. And I think it's kind of an open question whether people like what they're doing with generative AI. Because of market pressures, they have added on these generative AI features, whether or not users have asked for them. And right now, a lot of the things that would have been, sort of experimental in the past, or that Google might not have launched because it has such a high bar on accuracy.
Right.
That's right in the main product.
You
right
like
now.
It, Carol.
What? Google?
Yeah, the Google AI search result
AI
return.
overview?
I
At the top. I know you like it.
I do, because Tim was like, where did you get this from? But I'm doing, take us in. I feel like when we do a big tech story and there's disruption going on and, execs were pitched something and they kind of pass, there's internal discussions about, hey, we kind of missed the mark. Take us inside Alphabet, Google, and what's going on right now. Are they being like, wait a minute, the employees, we've got this. We need to move on.
Yeah, so Google is coming off of a rocky few years. Davey and I have heard from our sources that ChatGPT really sparked a panic inside the company. It was very painful for Google to see someone else taking its invention and finding, the product hit. And so they've really turned up the heat on their employees to ship products faster. And the woman really at the center of it all when it comes to search is Liz Reed. She's in the top search job now. And what's interesting about her is she's a longtime Google executive, but she's spent most of her time in Google Maps. And so that means that she's a little bit less wedded to some of the old ways of doing things in search. She's a little more willing to experiment. And I think that sensibility has really come in handy as Google kind of enters this new era.
I think what is wild, and I think we've seen this, was it with either electric cars or something? Tim will remember better than I will. But you guys write in the story, one thing that really stung about ChatGPT's rise was that it was built on Google's own inventions. OpenAI's chatbot uses an AI architecture that Google detailed in a now legendary research paper published back in 2017. I mean, Davey, we've seen this before, where all of a sudden, a company had the research and then passed on it. I mean, that's got to kill.
Absolutely. I mean, Google runs two of the most advanced AI labs in the world, Google DeepMind, which has since joined into Google DeepMind, I should say. And a lot of the AI developments that they have rolled out over the years has been really under the hood of these consumer-facing products. So, AI is something that CEO Sundar Pichai has said he wanted to orient the company around even by the mid-2010s, but not the kind of generative AI that we see in ChatGPT and, major products today, but more like improvements to search that are under the hood. Things like making search faster,
right.
making it more, return more relevant results, things like that. It really stung when ChatGPT came out and became so popular among the public.
Well, you two make the point in the piece that he thinks that we're at the really, really early innings when it comes to AI's effect and AI's role, not just on the company, but also on the world and the way that we interact with the world. Julia, it makes sense that Google would be so protective of Google.com and what its search page looks like. After all, it accounts for so much of the company's revenue and profit. It's really the thing that they need to guard. That said, what are they doing moving forward in a few months that will potentially upend the way that consumers see search results?
Yeah, I think that we see Google testing a few different paths right now. It seems to me like they aren't entirely certain yet of what the best way is to incorporate this into Google search. They've got the AI overviews, which Carol is a fan of, where they're often topping the search results with an answer that was drafted by artificial intelligence. Those are there whether or not you choose them. They just appear automatically. But then they've also announced that they're experimenting with this new tab called AI mode that you'll be able to click to, similar to photos and the other, features in Google search. And you'll be able to go there for kind of like a ChatGPT-esque experience, like when you really want to go deep and have a back and forth with Google's artificial intelligence to explore a particular topic. And so I think it's interesting to see them rolling out that dedicated mode, and we'll see how that goes over. People who pay for Google's premium AI features are getting an early crack at it now.
I mean, we talked some numbers at the introduction to you guys, $198 billion in revenue in 2024, search. Whenever they report earnings, we go to those search numbers because at the heart of their business, that's what it's all about. Julia, I want you to first weigh in on this. This cover story, how important is it that Google gets this right as the world continues to move forward and embrace AI?
It's critical. I think that the success of the company depends on it. Google has made some progress in recent years in diversifying its revenues. Google Cloud is now profitable, which was a big win for them. But search is still the heart of the company. They need to remain relevant to users' daily lives. They still want to be that thing that you turn to reflexively when you have a passing question. And analysts have begun to tell Davey and me that they are concerned that search growth going forward may start to level off a bit.
We know things can change. Remember AOL? I mean, and other things, I'm just going to say, right?
Yeah. Oh, that's what happens.
Exactly, exactly. Davey, got about 30 seconds left. Your final thoughts on this story and kind of what comes next.
Yeah, I mean, I think that this story shows what a critical piece of infrastructure in a lot of ways Google search is to the web. And as AI marches forward, what is sort of the future? Google is a reflection of the web, and it's also sort of, a utility to explore the web. But if both are degrading, which is sort of the sense that we get from our sources, then what next?
Yeah, it's a big question. This is why it's such an interesting time period when we look at all of these big tech players. Davey, thank you so much. Davey Alba, big tech reporter at Bloomberg News here in studio. And of course, Julia Love out there in our San Francisco bureau. She is our technology reporter here at Bloomberg News.
I'm driving in my car.
Yeah, I'll bet you let me drive.
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. You are up to speed on the markets thanks to Charlie Pellet and Bill Maloney. And we're bouncing around here. Little change, though, on the S&P 500, slightly lower in the Dow Jones Industrial Average, and just up about 0.4% on the NASDAQ 100. So, yeah, as we kicked off a couple of hours ago, or almost 2 hours ago, markets really searching for some direction here, Tim.
Well, let's see what Julie Beal has to say about this. She's chief market strategist and portfolio manager at Kane Anderson Rudnick. She joins us from Santa Monica. We just heard from Barry Ritholtz about sort of the twists and turns of the market since the election. Was yesterday, in your view, a turning point, given the rally that we saw, the conviction that we saw based on potentially more targeted U.S. tariffs?
I think that for sure there was a lot of enthusiasm and excitement that, maybe this is really the moment where there's going to be more clarity and we're going to be moving a little bit less quickly and more thoughtfully. I think that still remains to be seen. And I think the much bigger issue is less how the market reacts and more how companies and consumers react, because that's really what's going to be driving the markets on the long-term horizon. And I think you can say to most companies, hey, we're going to add these tariffs. Oh, just kidding, we're not going to do them. You're going to be fine now. I think most capital allocators are like, there's still the risk that this will change really quickly, and I don't want to be caught sideways on that. So I think there's a lot of still underlying concern that even if you do roll back these tariffs and make them less deep or less broad, there's still this underlying concern, hey, I don't really know what's going to be coming down. It hasn't necessarily been well communicated, and I don't want to put myself in a risky position where I'm on the wrong side of that.
All right, so does that mean, Julie, move into cash-like investments, don't play the equity side of things? Like, what do you do then in this environment?
I think your previous guest really said what I truly believe is that it's really impossible to try to time this kind of a market. There is so much desire to kind of create and add value by trading, by moving, by reacting. This is a really good time to be sitting on your hands, frankly. I like the Howard Marks statement, don't just do something, sit there. And I think this is a real sit there moment where as long as you have a portfolio that's put together of good quality companies that are they themselves able to respond to changes in the market, you should be okay. That is better off than trying to position for a very specific outcome.
Well, let's talk about some of those companies that you have your eye on. We always love it when our guests send us stock picks, especially stocks that we don't talk about all the time.
These are not household names.
These are not, well, for me, they're not household names. For you either, Carol?
No.
Okay, Copart, CPRT is the ticker. It's down 3.3% year to date. They provide insurance companies with services to process and sell salvage vehicles through auctions. It's about a $53 billion company.
Yeah.
What's your view?
So, I think, look, we're looking for these companies that have really durable earnings streams, even in trickier market conditions, trickier economies, so that we don't have to be perfectly correct on the macro. And Copart's a great example of that, where if you look at the consistency of their earnings, it's really a demonstration of how competitively protected they are, right? A lot of these salvage yards, these are really not things that you want in your backyard. They're really hard to permit. They're really hard to come by. And so they are a really valuable asset or once you have it in place, and you need to build the scale so that you can run these very large auctions. So they have a lot of competitive protections around them. They're good stewards of capital, and that is the kind of not flashy, not sexy type of business that I'm really attracted to right now.
All right, another one is Verisk Analytics. Hopefully I'm saying it correctly. This is about a more than $40 billion company.
Carol, they're based in Jersey City. It's in your backyard. You should know this company. Literally in your backyard.
I have no idea where they are. I'll have to look for their address. Who are they? What are they? They're up about 4% here year to date.
So you can think of Verisk as this intermediary where they take a lot of the claims insurance data and then sell it back to the insurance companies so that they can do a better job with their underwriting. And that is something that started years ago, I think in the 70s, where the insurance companies got together and said, if we pool our data and compare it, it will be much easier for us to underwrite accurately. And that's where this company kind of came to fruition. So obviously these data assets are extremely valuable, and it's pretty awesome when your customer actually provides the thing that you sell back to them. That's a pretty unique business model. And there's a lot of regulatory barriers around that too. So again, this is a kind of quiet company that not a lot of people have heard about, but I would rate it as among the highest quality that we own.
All right, so that's ticker VRSK, up 4% year to date. A company that's flat year to date, Tyler Technologies. This is a company that's based in Roslyn Heights, New York. It's $25 billion market cap. What's your view?
So Tyler Technologies sells software to municipalities, local governments, and a lot of these, cities have this really big challenge right now where they're not really able to actually have good IT staff and programmers on site. They just do not pay enough for that to really work for them. And many of the solutions that they have kind of cobbled together are homegrown solutions or companies that just don't even exist anymore. Tyler is unique in that they have pretty modern software that they're selling to municipalities, but they really know this customer better than an Oracle can ever speak to them. And so most of these cities are really being able to outsource a lot of their IT to a company like Tyler, who can take that off their hands and run it, in a successful way.
It's funny. There's been so much. In fact, there are a couple columns on the Bloomberg today from our opinion team, Julie, about investing overseas versus continuing to invest in the United States. What's a smart thought about that? What are you doing for your investors? Are you expanding in terms of investments overseas? And just got about 30 seconds.
Yeah, absolutely. I think what we are seeing right now is just a function of Europe just got way too cheap relative to the US. I do think that there's renewed excitement and fiscal spending that's going to be happening. And so that could drive more economic growth. Right now, growth estimates are still better for the US than for Europe, but I think you should be diversified and have exposure to both.
Okay. Which were you maybe saying that 6 months ago or no? Just quickly.
I think, broadly speaking, I think you should have, but you really weren't getting paid for having international exposure for the last 5-6 years, right? But I think it really makes sense now.
All right. Really appreciate it. Julie Beal, she's Chief Market Strategist, Portfolio Manager at Kane Anderson Rudnick, joining us from Santa Monica, California.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.